No notes. Welcome back to episode 26 of the Queer Money follow-up series, covering podcast episode number 26 of Queer Money.
Our 27th day in a row doing this.
I'm kind of impressed. I'm so impressed with myself. I've said this before. I'm saying it again. So we have a question for you. We were wondering if you knew that there's actually still more time to sign up for healthcare in 2021.
Yeah.
We're going to discuss why that's the case here in a few minutes. But did you know that that's the case? Let us know in the below in the comments, yes or no, if you were aware of that. We'd be curious to know.
Yeah.
So before we get started, give this video a thumbs up, if you don't mind, please. Subscribe to this channel and set notifications on this channel so you can join in on these awesome conversations, because they're way funner when they're two-way.
Yeah. So back on episode 26 of the Queer Money podcast, we recorded that in
2016.
November. I think it was November. I'm pretty sure it was November of 2016. After the Affordable Care Act had been rolled out, and there were all sorts of questions on what it was. And so we invited Jennifer Fitzgerald, who is the CEO and one of the founders of Policygenius, to come on the podcast to talk about the Affordable Care Act to help our queer money community learn a little bit more about it. I think a lot of us since then have gotten a little more comfortable with what it is. Well, I don't know if comfortable is the right word. We're just right. We understand or are aware of what it is a little bit more, right? So that was the purpose of that episode.
And at that particular time, we had known that Obama's second term was ending and Trump's first and last term was just about to begin. So there were a lot of questions because Trump was pretty boisterous about what he was planning on doing to the Affordable Care Act. And a lot of people were sort of in this panic limbo mode, not knowing, well, exactly how am I going to be affected. So Jennifer started off the conversation kind of giving us the 411 what the Affordable Care Act was and what the major components of it included, such as the expansion of healthcare to more individuals. Of course, that had some adverse effects on some people who had worked for a day job. It also provided guaranteed issues, regardless of pre-existing conditions. It offered the controversial individual mandate, and it offered some what was called the 10 essential health benefits, which included but aren't exclusively preventative and wellness benefits, including for chronic disease, maternity and newborn care coverage, which obviously is not adequate based on what we've experienced through COVID, mental and behavioral health treatment, including, which is something very important for the LGBT community, drug and alcohol addiction and other substance and abuse addictions, and then 7 other essential health benefits. So it provided a lot of value, and a lot of that kind of got lost in the controversy and the talking points that we heard and saw in the media. And then, unfortunately, much of our discussion on this particular episode was to talk about potential risks of the Trump administration, how it would change the Affordable Care Act, because I think at one point he was talking about just getting rid of it altogether. That would leave millions of people without options for healthcare coverage. And one of the concerns that we had on this particular episode was in part because we had interviewed Andrew Tremonte a few episodes prior about their transitioning from female to male, and how he was just starting with some of his treatments. And one of the concerns was, well, what if I start one of these treatments that can take up to 5 years, and all of a sudden Trump takes away the Affordable Care Act, which required coverage for transition, and this now coverage was taken away from me, and I didn't necessarily have the money to cover for this completely out of pocket. That could put some folks in limbo, because some of those procedures, once started, have a very adverse consequence if they're stopped before they're completed.
Right. So we know that there were some definite changes under the Trump administration to the Affordable Care Act. Many of those were ones that we didn't necessarily see having a massive impact on everyone that was covered, but we were fortunate enough that some of the ones that did cover things such as pre-existing conditions, the insurance that covered that allowed the coverage to expand to individuals who were trans, that was not taken away. So we're fortunate that was still there. Yeah. But I think that a lot of people are desperate to get back to the way maybe some things were before he started to take the knife to it.
That's what we're going to talk about today. So before we kick off and share those what you should know about the Affordable Care Act in 2021, Again, please give this video a thumbs up, subscribe to this YouTube channel, and set notifications on this YouTube channel so you know that when we go live. Jennifer shared a very poignant quote on the episode, and she said that people spend more time researching phone plans than healthcare plans. That was according to a recent study that was done right before she had come on the episode. And so, and I think, unfortunately, that probably applies to us over the last couple of years. We haven't really been that diligent with researching our healthcare plans until just this recently.
Right. Well, I think that, I think to a certain degree, people want to be in kind of a similar feeling that they have with their phone plans that they will have with their healthcare, and that is kind of a set it and forget it, right?
Yeah.
We'd like to be able to set it and forget it, but the reality is that every year the plans make changes and modifications. Sometimes those changes and modifications are because of what has been passed down at the federal level for the requirements. Sometimes it's the state level. There's state level requirements that are being made, changes that are being made. So if you're going with a state level healthcare plan like we're on, we have to stick with, or our plan has to stick with certain guidelines that are at the state level. So there's constantly changes being made. And then there are changes being made by the healthcare companies themselves. They are looking for efficiencies. They're looking for ways to make sure that they're providing the kind of coverage that most people need at a I don't know if I want to say affordable way, because I honestly don't think that healthcare really ever is that affordable to the average person, but they're trying to put it out there in a way that a majority of people can afford it.
Yeah. Well, and I think this is probably this last time around was the first time we had invested so much time in researching what kind of coverage we would have since we have been self-employed.
Right.
And fortunately, we did give it a couple of attempts, because first couple of attempts in looking for coverage in Nevada, we thought we were going to be paying an enormous amount of money month over month over month. But with doing the right homework and researching what we're going to talk about here in a few minutes, the subsidies, we were actually able to save ourselves a considerable amount of money.
Right.
So there is a big announcement that we should share.
And that actually just happened 2 days ago.
Yeah.
And that was President Biden's January 28th executive order around healthcare, and this is due to COVID. Basically, what has been an issue over the last almost year now, what has been an issue is that folks are in very unstable circumstances when it comes to their jobs, when it comes to healthcare. Right? You may have some employers that are furloughing individuals and taking away benefits. You have some individuals who are completely losing their jobs, then getting hired back, then losing their jobs again. Right? So there's this kind of unstable environment when it comes to jobs for millions and millions of Americans. And because of that, the president wanted to provide some stability when it came to healthcare for individuals, because healthcare is one of the leading expenses for most families. The reason why the president wanted to do this was to allow individuals who are in these precarious situations to look for and get the kind of insurance that they need while they're out there dealing with the economic impacts of COVID. One less thing for these families and individuals to have to worry about.
So what he's basically doing is allowing a second open enrollment period in 2021. That'll start February 15th and last through May 15th. So if for whatever reason you don't have coverage, healthcare coverage in 2021, or at least as of February 15th, that is your opportunity to go ahead and try to get coverage under the Affordable Care Act, so that you can get the coverage that you may need.
Right. So several things here. Whether or not you procrastinated, like a lot of folks have done, I mean, it just happens. Every year there are people who know that the deadline is whatever the deadline is based on their state, right? For a lot of states, the deadline usually ends mid-December. For Nevada, it was actually mid-January. But for a lot of states, because was mid-December, some people just didn't take advantage of it or didn't do the shopping around until it was too late. Or, as in our case, I made a mistake when I went through the process the first time, thought it was super expensive, so I kept on delaying it because
We put our head in the sand.
right, I to a certain degree was worried about how much it was going to cost us. So I waited, and some people just wait too long, right?
Yeah.
So whether you've procrastinated and didn't apply, or since the open enrollment period ended, something has happened to your individual circumstances, you now have the ability to go to healthcare.gov and start looking at available plans. You might want to do this anyway. And the reason I say you might want to do this anyway is to just make sure that you did make the correct decision, or if there is a plan out there that's better suited to your individual needs right now compared to your needs maybe when you applied for back in November and December.
Exactly. So the second part of this discussion we're going to share is the need to research whether or not you qualify for subsidies. This is a significant component of our interview with Jennifer Fitzgerald.
Slow down, honey. Slow down.
I've been calling her General all
Open
day.
the mouth wide and enunciate. I know you know how to open the mouth wide.
Quiet. It's a family show. We talked about how lots of people don't take advantage of the subsidies that are provided, and it can be significantly helpful, as we will share with our personal circumstances. So there are a couple of qualifiers for subsidies, but basically this is available to those who only earn between 1 to 4 times the federal poverty level, FPL. So if you're an individual, that's between $12,760 and $51,040. If you're a family of 4, that's between $26,200 and $104,800.
So that's your household income, or as an individual, it's your individual income. For a household of 4, it's your household income.
So if you're an individual, basically you qualify if you earn less than $51,000. If you're a family of 4, you qualify if you have a household income of less than $105,000, essentially. Go to, again, healthcare.gov to see whether or not you qualify and what kind of benefits you have. There are some other stipulations as well, though.
Yeah. So if you are employed and your employer doesn't offer health care, we know that if you're an employer and you have less than 50 employees, you don't necessarily have to offer health care. So if your employer doesn't offer health care, then this is definitely something that's available to you. If your employer does offer health care, then you've got to tap into the health care from your employer. Sadly, it may even be more expensive than what's available on the open market.
Exactly. Also, you have to be a U.S. citizen to qualify for subsidies. You also may not be on another plan, such as Medicare, Medicaid, Children's Health Insurance Program, or other form of public assistance to qualify for the subsidies. And last but not least, if you are married, you must file jointly.
Right.
You can't file separately and still qualify for the subsidies.
Exactly.
So that qualified for us. So we kind of we didn't know that we would be able to take advantage of the subsidies the way that we are now for 2021.
Right. So just there's I think a couple of ways to look at how these subsidies work. There's the first way is it's basically a tax benefit or a tax credit that you get. So if you do not take advantage of the subsidy right away, and then you file your taxes at the end of the year, based on your income for the year, you can then get that tax credit applied to your taxes. So here's an example. You're paying $800 a month for health insurance because because you made that decision that you want to pay that monthly $800 a month. And then let's say you get to the end of the year and it turns out that you did not make as much money as you thought you were going to make, or your income was for whatever reason cut off. You did not earn as much as you thought or originally had planned on. You can then file your taxes to get that money back that you paid for your health care. You will then get that tax benefit back. The other way to do it is to take advantage of the subsidy up front based on how much you pay for your premiums. And that's what happened with us. We originally went out saw this bill of a month, our monthly deductible. It was really high. We were surprised by that. Then we went through and looked at the tax credit, the amount that would be available if we earned what we potentially think we might earn based on what we earned last year. And that significantly or drastically lowered our monthly payment. But what does happen then at the end of the year when you file your taxes, you do and I'm forgetting the word, begins with an R, but you actually do a review of your taxes or the amount that you've paid versus the amount that you've earned.
Reconciliation?
Thank you. Reconciliation. You do a reconciliation. Knock, knock, knock. Who's there? You do this reconciliation, and what ends up happening is it determines whether or not you actually owe less or more. So you definitely want to take a look at that. When you do go out and start shopping, if you're going to do this shopping between February 15th and May 15th, can take into consideration whether or not you want to apply the subsidy right away or wait until later, because it will have a big difference on what it is you pay each month. Doesn't necessarily mean you're going to not have to pay in the end, because you will eventually have to pay the difference.
Exactly. So if all this sounds complicated, if it sounds too mathy, because it does for me, go to healthcare.gov. They have a calculator there that you can answer some simple questions, and it will give you some direction of whether or not you qualify for subsidies, and then explain succinctly how you might be able to apply them to your situation. So again, go to healthcare.gov. And then lastly, we want to remind you that there is now the second open enrollment period because of Biden's executive order that will last between February 15th through May 15th. So if for whatever reason, come by February 15th, you don't have health insurance coverage, that is your opportunity to take advantage and go ahead and get on the ACA.
Right. So you've got 16 days from now.
So hopefully you don't lose your job.
Go out. Yeah, might want to go out there and start shopping around already.
Yeah. Do your homework. And again, thank you for joining us for another Queer Money Follow-Up. Here is your Queer Money Follow-Up takeaway from this episode. Please subscribe to the Queer Money Podcast at debtfreeguys.com/QM. Then again, as we talked about earlier, please let us know in the comments section below whether or not you knew that there was a second open enrollment period coming. We'd love to know exactly how well that message is getting out to folks. Just share in the comments or in the Queer Money Facebook group if you happen to be a member there. And lastly, or next, I should say, join us when we cover episode 27 of the Queer Money Podcast.
Tomorrow.
And we talk about how to turn your someday goals into reality in 60 days. This was a fun episode that we did with a friend of ours who wrote a book about the topic. And it's very timely for what David and I are working on right now that we're going to be sharing with all of you, hopefully here very soon. Now, lastly, give this video a thumbs up, subscribe to this YouTube channel, and set notifications on this channel so you can join in on the conversation. Thank you, and we will see you tomorrow to talk about reaching your goals.
Have a good one.